In 2019, there was a trader named Mark. He was from Chicago, an engineer by training, IQ above 140, literally a genius-level guy. Mark spent 2 full years reading nothing but trading psychology books. Van Tharp, Mark Douglas, everything he could find. He built his own system, back-tested it, paper-traded it. Everything looked perfect on paper. Then he put in real money. The first 3 months were nothing but losses. His system was working on paper, but in his real account he kept making the wrong decisions over and over again. So he hired a trading coach. The coach sat down with him in the very first session and asked just one question. "Mark, when you are inside a trade, what do you feel?" Mark thought about it for a moment and said, "I feel like I have to win this trade. If I don't, it means I am a loser." The coach said just one line back to him. "That is exactly what is destroying your account. Your brain is treating every trade like a survival threat." That was the moment Mark realized his problem was never his strategy. His problem was his own mind. And that is exactly what we are going to understand together today. Our brain has 3 main parts that directly affect every trading decision we make. Understand these 3, and your entire trading picture becomes clear. The first one is the amygdala. The amygdala is the part of your brain that detects danger. 50,000 years ago, when humans lived in the wild and came face to face with a predator, the amygdala activated instantly and triggered a fight or flight response. Run or fight. That system is still inside every single one of us today, completely unchanged. The problem is that your amygdala cannot tell the difference between a lion and a losing trade. It treats both of them as equally dangerous. So when you lose $500 on a trade, your brain literally reacts the same way it would if you were being chased by a predator in the wild. Your heart rate goes up, your hands start to shake slightly. Rational thinking shuts off. You stop thinking and start reacting. This is not drama. This is biology. The second part is the dopamine system. Dopamine is the chemical that makes you feel rewarded. And here is where it gets really interesting. Dopamine does not only release when you receive a reward, it releases on anticipation, meaning the moment you open a trade and the numbers on the screen start moving green, your brain responds in the exact same way as an addict sitting in front of a slot machine. It is literally the same neurological pathway. This is why overtrading happens. This is why people keep taking trades even when the market is not giving a clear setup. The brain is chasing that dopamine hit, and it gets it just from staring at the screen. The third part is the prefrontal cortex. This is your rational brain. This is the part that plans, calculates risk, and makes logical decisions. And this is the exact part that literally shuts down under stress. When the amygdala activates, prefrontal cortex activity drops by 60 to 70%. Think about what that means. At the exact moment you need to be most rational, when your trade is going against you, when your account is on the edge of blowing up, your rational brain is basically offline. This is not a personal weakness. This is evolution, and it happens to every single trader, beginners and professionals alike. The only difference is that professionals have prepared themselves for this in advance. Now, let me walk you through the 4 specific patterns where your brain sabotages you. As you listen to each one, ask yourself honestly whether you have ever done this. The first pattern is loss aversion. There is a famous study from Princeton University where researchers gave people $50 and made them an offer. Would you play a coin toss game? Heads and you win $100 more. Tails and you give back your $50. Mathematically, that is a good deal. The expected value is positive, but the majority of people refuse to play because the fear of losing feels 2 times more powerful than the excitement of winning. This is scientifically proven. In trading, this shows up like this. You are in a winning trade, the profit is building, logic tells you to hold because the setup is still valid, but your brain says, what if it reverses? Get out now. so you exit, and then the stock goes up 3 times without you. The second pattern is confirmation bias. You buy a stock. Now, without realizing it, you start looking for only bullish news. The analyst who is bullish sounds right to you. The bearish signal showing up on your chart gets ignored or dismissed. This is not intentional. Your brain is protecting its existing belief. Cognitive scientists call this motivated reasoning. You are not analyzing data anymore. You are justifying a decision you already made. The third pattern is recency bias. The market has gone up 3 days in a row, so your brain automatically assumes it will go up tomorrow too. You have taken 2 losses in a row, so your brain tells you that you are in a losing streak and the next trade will lose too. Markets are random. The brain looks for patterns. That clash, that exact clash, hits your account every single time. The fourth pattern is the sunk cost fallacy. You are already down $2,000 in a trade. Logic says your stop loss was hit, exit the trade, move on. But your brain says I already put in $2,000. If I exit now, the loss becomes real. Just hold on, it will come back. So you hold. And the $2,000 loss becomes $10,000. Here is what you need to understand. That $2,000 was already gone the moment you decided to hold past your stop. Whether you held or exited made no difference to the money that was lost. But the brain treats past investment as a reason to make future decisions. And that one mistake is how accounts blow up. Now for the good news. The brain rewires itself. Neuroscience calls this neuroplasticity. And here are 5 specific things you can start doing from today, from your very next trade, that will change everything. The first thing is to build a pre-trade routine. Before every single trade, spend 5 minutes on a fixed routine. Breathe deeply, 4 seconds in, 4 seconds hold, 4 seconds out, just 3 times. Then go through your checklist. Does this trade match my setup? Is my risk clearly defined? This simple 5-minute process calms the amygdala and activates the prefrontal cortex. Athletes do this. Surgeons do this. The best traders in the world do this. The second thing is to think in R, not in dollars. 1 R equals your risk per trade. If you risk $200 per trade, then saying I made 3 R today means $600 in profit. Thinking this way reduces your emotional response. Your brain stops treating monetary loss as a survival threat. When you think in dollars, you feel the emotion. When you think in R, you do the math. The third thing is to journal your emotions, not just your trade numbers. Most traders write something like APL long, entry 182, exit 179, loss $300. That is not enough. Write down why you took the trade, what you were feeling when you entered, whether you were following your rules or acting on emotion. This practice over time helps you identify your own patterns. And once you can see your pattern clearly, you can break it. The fourth thing is the 2-loss rule. After 2 consecutive losses, you stop trading for the day. Close the screen. Go outside. Take a walk. The amygdala needs time to reset. This rule gives it that time. Every serious professional trader has some version of this rule. That is not a coincidence. The fifth and most powerful thing is to separate your identity from the outcome of your trades. I am not a losing trade. I am a trader who took a losing trade. That shift sounds subtle, but neurologically it is massive. When you are not personally attached to the outcome, the amygdala threat level drops dramatically. You stay clear-headed. And a clear-headed trader is the only kind of trader who is consistently profitable. I want you to close this video with one thought. Every time you made a so-called stupid trading mistake, it was not stupid. It was human. It was 50,000 years of evolutionary wiring working against you. The best traders in the world feel the exact same emotions you do. Fear, greed, FOMO. The only difference is they have built a system that bypasses those emotions. You can build that system too. It will not happen overnight. But starting today, starting from your very next trade, do just one thing. Trust your system, not your feelings. You do not beat the market in a single trade. You beat your own mind. If this video helped you, like it and send it to one trader friend who needs to hear this. Tell me in the comments which of these 4 patterns you have noticed most in yourself. I read every single comment. In the next video, I am going to break down how Wall Street hunts retail traders' stop losses and exactly how you can protect yourself. Subscribe so you do not miss it. Until then, trade smart, trade calm.